Flash crash. Could stocks be headed for a Wall Street warning or a 10% correction? This pattern here is going to be very important. But first, let's look and see what the headline tells us because the S&P exposure has now hit levels that preceded a 10% slide, or said another way, a 10% correction is not ruled out. So, have you been naughty or have you been nice? Make sure you watch all the way until that's what could be happening here. And if that's the case, have a stock pick for you. All right. So, what is this pattern and what could it mean for us? Well, let's go back in time. What do we have? Flash crash. That's right. That's what could be happening here. And if that's the case, that's the low we establish. That's the lower low. Okay, low. That would be the lower low. That's right. So, if we're going to go lower here, I think the really important question is going to be whether we actually hold this low. Now, let's zoom out and see exactly what that means because I think a lot of things require some perspective. So, if this is it and the Wall Street bears are going to take over, we need to see bear follow through. Right now, QQQ does not have that. Here's where it is evident. It's right here on the S&P. And this chart looks a lot worse, I'll be honest, than QQQ. What do we have here? We have some really big warning signs. 1, 2, 3, 4, which means right now the bears have a pretty good recipe. And they got that as of last Friday. What do we have this week? We have an inside bar. What an inside bar means is a pause inside of the dominant pattern. What's the dominant pattern? I just told you it's bearish. We just got the bear recipe. All right. Now make this really easy for me because my brain is sweating a little bit. No problem. Let's make it even simpler. Let's go here and delete everything because what we want to think about is whether this 10% slide could turn into more and could it happen? That's really important. Let's just look here at a very simple pattern. It's how far do we get above the blue line on the weekly chart before we eventually test it? It's the big one. Boop, boop, boop. That's the bear market. Really, that's the bear market? That's it. So we went for too high for too long above the blue line. And when we finally came back to actually test it, that was it. Dead cat bounce, lower low, dead cat bounce, lower high, fade, lower high, lower low. That was it. That was the bear market. Where are we right now? Oh, we've been like pretty far from home base for a while here. No true tests. No, there's no true tests of the blue line. It's not happened yet. So if we finally test it, is that going to be it? I don't know. I don't think it will be, and that's no surprise to people on this channel, but I do want to provide a balanced view. So, lower high, and we can also say that if we look at whether this time's higher high is currently over the high. That's what happened. Stonks went down. If that lower tail happens, it means that we're going to be lower than we are right now. So we're likely going to lose the 50 MA if I'm right. What does that mean? It means the crash I just talked about, showed you on the 15-minute chart, right? That short-term time frame. That's right here. That's QQQ as well. It means we're going to lose this low and actually go down. If that would happen, it means that we're getting bearish continuation on our bearish recipe for the weekly chart and that as well. So what we want to look for on the 31st or the last day of the month. What did we decline by here into 2024? Let's have a look here. I'm really curious. 1%, 1.1. So from the open, we got cash. It might just be a buying opportunity. Stocks might go on sale. Maybe we're frothy. I think we are. I don't think that this is going to be the time for us to worry about this, though. All right, that number one pick. Let's get it here. All right, Santa. So stocks have been a little bit mixed, but let's zoom out here to be objective. There's Mr. Green. There's Mr. Mixed. That's the Christmas special. And then looking back at year to date, here's what I find interesting. It looks like people are window dressing. They're pretending like they owned the good stuff the whole time. We go back here all the way to year to date. That's what they're pretending like they owned. That's right. So if we're going to be getting these alerts, people are likely going to be looking to sell some big caps into the beginning of the year. What would that signal look like? Well, look right here. Losing luster. Dawson on the Magnificent Seven. This is Cameron Dawson. Mag 7 outperformance over the last months is unsustainable. We're seeing GDP ramp 2.3, 2.7, 2.6, 2.8, 3.0. Hey, Santa Claus. So what was that alert we were talking about? It's PSQ. If PSQ is going to be actionable, what does it give us? A window of opportunity of 3 weeks, which means we're looking at the one-day chart and a risk reward. What I just told you was we could see some tax gains being harvested next year. And most people, 86%, that's like most people, think they're going to be higher, but not fantastic. So why not sell them now and rotate into something that'll work better? That's what it really looks like to me. So Santa, what are you saying? Be prepared that these stocks might go on sale. I actually added this to my personal portfolio as well. So I got PSQ right here, 50% waiting on my account as a hedge. So if you're interested in joining us, we do a 40-day, 45